All right. Very good morning to everyone. Welcome once again to the morning market review. This is where we make profit daily. My name is Victor. They call me the Bishop, and I'm going to be taking you on this analysis this morning. Just before I forget, we have a very, very special event, a training event for tomorrow in the Abuja office. So for those of you uh, currently in Abuja or that will be in Abuja tomorrow, especially in the morning from 11 a.m., we're going to be having this very, very wonderful strategy session. Myself, and for those of you who are familiar with Mr. Shegun Enujo, our head of education, we'll be anchoring this event together. So if you have been trading with fear, you've been trading and it looks like it's not really working, you're always in the market, but you are scared, or you cut your, you place the trade and you close the trade, later it goes into profit, just come and I can assure you we'll have the solution to your problem. All right. So welcome once again. Let's see what the market has for us this morning. And let's see how we can maximize profitability. Good morning, Mr. Femi. Good morning. Good morning. Let's see. Um, wow. We just have a few persons on call, but it's okay. Good morning, everyone here right now. Good morning, Mr. Endurance. Good morning. All right. I don't know. I think, unfortunately, a lot of you are not currently in Abuja. But we are going to be having the online version too. Worry. We're going to be having the online version too. Okay, good morning, Mr. Kim. Good morning. Good morning. So, you see, the market consists of a lot of things. The market consists of both fundamentals, technicals, as well as the psychological analysis. Let me put it that way. Uh, Sentimental, but is also like psychology, you know. So, for instance, now, let's say during December period, you feel like, oh, everything is going to be expensive. Everything is going to be expensive. Everything is going to be expensive. Technically, yes. Sentimentally, also, your brain kind of tells you that let me start taking action now before that time. All right. That's if you are a buyer. And if you're a seller, let me hold on to that time because price would have gone up before I can sell. So sometimes the market can move based on psychology, sentiments, what buyers and sellers are thinking, right? What buyers and sellers are thinking in the market at that time. So sometimes if you go into the market without having any idea about the sentiment, sometimes very few, not just very few times it can affect your trade. Then technically also, say we don't check the technicals, we don't know what's happening in the market, we don't know what's going to happen in the market, right? It can also be an issue. Now let me share my screen. So let's say, okay, now this is today, Wednesday, right? And if you don't check the market, sometimes you find out that you are trading, let's say GBP USD. And as at 1:30 p.m., the news comes out for GBP today. And the news comes out, say you are buying GBP USD, and the news comes out bad for GBP. Hence, GBP becomes weak and price drops. Meanwhile, technically, you have a buy. You're already on the buy. In fact, possibly you're already in profits, but you haven't closed your trade or you haven't broken even. And the news comes out, and you be like, what's happening in the market? There is fundamental, all right? It's nothing personal. It's just one of the ways the market moves, right? Then there's technical. Technical is the most common variable out of all of them, all the variables. Or let me say the three major variables. Technical is a constant, rather. Is a constant. It's always there. The chart's always moving. It's always forming patterns, always giving us some, possible moves and all. So technical is not the only thing that there is to trading, but it is one of the major things. If you don't understand technicals, then even your fundamentals and your sentimentals, they won't even hold any water, all right? So sometimes that might be an issue. It might be a challenge. So always do well to check your fundamentals, right? So today we know the major news we have for today, as usual, the red envelope. Sometimes this one also, the brown envelope. This is ECB Financial Stability Review, European, uh, let me see, medium impact news. So sometimes medium impact news can affect the market. It's an assessment of European Central Bank, an assessment of condition in the financial system and potential risk of financial stability. The evidence on strains and imbalance can provide insight into the future of monetary policy. Okay, so this one is deep. It can either be hawkish or dovish. It's not a data news. So most of us might not know how to trade it. But you see the ones that are data news. Let me pull this out. Data news, like this for USD that we are having, they are easier to trade. Okay. So as and when price is going to come out, we need it to unemployment claims. This one, I think, actual less than forecast will be good. Let me see. Actual less than forecast good. Yes. So it's because this is nation's earliest economic data, the market. Let me see the number of individuals who are fired for who filed for unemployment insurance for the first time during the past week. So we are looking at the number of persons that lost their job. So a higher number is bad, a lower number is good. Now, irrespective, okay, so you need to watch out for some of these news because they can have effect on your trades. So until afternoon, say around 1:30 p.m. and 2:30 p.m. for GBP and USD respectively, I think we are in the clear. Now, technically, right? Technically, we are back. So I think from last week, I think my analysis are just still here. So it's good. Let's just continue this. For those of you trade US 2000 indices, if US 100 is not going well, US 500, sorry, US 500 is still good. S&P 500. So price was here Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday. So price was here, and the analysis was if price can either come back down before starting or go up, do a retracement and continue. But you can see price went up, retraced but didn't stop here, but finally came all the way here. This is where we have the liquidity from our higher time frame. This area that was shaded here. Let me go to my daily so we see it. So this levels right here. This is where price wants to come to. So sometimes if you can allow price to do what it needs to do, it's more like saying, think of the market this way, all right? Think of the market this way. So once I finish all of this, just dive into our charts. Let's say, okay, that's good. Buy on US 100 so far. That's good. Mr. Felix, I've offended you too many times. Too many times. Okay. Good morning, good morning, good morning, everyone. Good morning. Okay. Yes, a buy on indices this week basically has been good. Now let's do it this way. Let me bring it this way. I said price. If you allow price to do what it needs to do, right, then there will be a compromise. This is how you say you have you're a child, because obviously the market is bigger than you. So you are the child, the market is the parent, it's your parent. And you are trying to get something from your parent, just the way you're trying to get profit from the market. Wouldn't it be wise for you to do what your parent asks you to do, or for you to find out what your parent like? And once you can find out what they like and you do it, you can then have easier access to getting what you want from your parent. Now, the market has what it wants to do, right? What it wants to do. Your job is to find out what exactly does the market want to do. So once the market wants to do that, then you follow it. You do what the market wants to do, or you help the market to do it. You be in you be in the side of the market, right? Align yourself to the side of the market, then you will have less losing trades. What do I mean? So if you go to a much higher time frame, and what the market wants to do, most times, what the market wants to do, it doesn't discuss it with you on the lower time frame. You know, it discusses it on a higher realm, right? On a higher realm, right? So what I mean is higher time frames, your weekly, your daily at least, all right? A few times your 4 hours, but more of your daily. So if I go to my D, the market likes to, in an upward trend, it likes to break out and continue, break out and continue, break out at least a good number of times before it changes pattern again. So what do I mean? You see a breakout, this high, retracement, then a breakout above this high, right? So if you have something like this, you'll see price wants to come back into these levels to continue, all right? Come back and continue. You can see these highs again. Then you can see a breakout from these highs, retrace and continue. It does this more on the higher time, except there is something fundamentally wrong or psychologically wrong. That is one of the reasons why it might not respect these zones. Just like here, it ought to have bounced from here and keep going, but it came all the way down, right? Good. So now, what do I mean? We have this level that price broke out from. So here is where we are testing. So that means let the market have its way. Let it come back to this zone to the test. And if you look at it on 4 hours, that's where we have this zone, right? This red zone here. Hence, price, okay, on 1 hour now, the same zone. Price was here on Wednesday. It's not yet here. So that's why I said it might actually not go up yet. It might still come in. But once price can come into these levels, then the probability that price will start going to the upside, it becomes very high. So allow the market to have its way first. Then you put forth your request and the market most likely will grant you your request. So if I know that the best buy I'm going to be having is when price gets here, then I need to wait for price to get here. Right. So once price gets here, this is where you can use your 1 standard lot, your 5 standard, 10 standard lot. And for those of you who have very, very good volume, your 100 standard lot. And this is where those guys you are seeing online, where they make them. They don't come outside every day to tell you, oh, I traded today. No, most of them is when they make good money, they come outside. And this is what they do. They wait for the market to have its way and they follow the market. All right. Good. So that's why indices have been going to the upside. All right. So I told you that I'm not sure price will actually really, really go up. But if it can get here, that's when we're going to have that movement. So you can see price finally did it and we are riding it. The same thing, let's see, US 100. We marked here, US 100 did like it wasn't really respected, but finally it did. Finally it did. Look at it on the 1 hour time frame. This is actually the zone. Okay, so this is it on, and this is it on 1 hour. So I'm just trying to explain what you are seeing. Now there's a higher probability that price will also take out this retrace and continue to the upside. So US 100, I think we are still flying. We are still flying. Same thing for US 500. And DE, let's see. D40. Okay, so this is the zone that we are expecting D40 to get to now. It has gotten to that zone. So what do you expect price to be doing for D40 or D30, D40? Up or down? Now this is an open question, and I'm respecting your answers. DE has finally come into these levels. Now it's respecting these levels. Where do you think price should be headed now? Okay, good morning, Mr. Peter. Okay, Mr. Femi said up. So you said up. Okay, so Peter up. Okay, good. So up. Now on 4 hours, this is how it looks like, and on 1 hour, this is how it looks like. Let me see. It's just starting its flight upward, up. Exactly. So your higher time frame gives you a better perspective to what price is doing. So all of these things I'm talking about, you can't understand it if you don't use your higher time frame. You use it for analysis. You then come to your lower time frame and look for the possible opportunity to execute that buy, right? So we are just starting that movement to the upside. So I expect a continuation to the upside. Worst case is price might just come. This is where we can now start talking about strategies. By strategy, I mean there's continuation pattern, there's reversal pattern. Let's see. So you have the difference of these two levels. Now, if you look closely, what I did here is to connect opposites. You know, they say opposite attracts, right? Opposite attracts. So let's say I have we've been bullish, bullish, bullish. Okay, we've been bullish, bullish, bullish. Then we're bearish here. And if you look at this, the wick of this bearish candle went up here and all the way down here, right? So that's why I'm connecting down here and as high as it went. Good. So what I'm trying to do is one of the best buys, continuation buy I can have is if price comes back into this zone, opposite attract. I'm buying, but I need to come into a sell area, all right? Before we then continue that buy. All right, this can be said to be your order block, your order flow, right? So the long run, we are still expecting price to push to the upside. Yeah. So, for the Euro JPY, I think we had on 15 minutes. Okay, let me push it back to last week. This should be Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday. This is Wednesday. And on 15 minutes, we had this. Okay, we had this. This was our buy zone. And we had that buy. Price came back to that level again and is trying to buy. So what do I mean? This is it on H1. You see this zone? This is one of the things we mean by opposite attract. You can see this sell from top to bottom. Price came back for it. Okay, so this is our buy zone 1 hour. So we are still currently pushing up until at least get here and possibly go above that level on Euro JPY. So we are still very much bullish. Very much bullish. If you go back to last week's video, you will notice what we said. I don't have enough time to recap, but once we are trending to the upside to maximize the buy. All right, we'll maximize the buy. So we are still actively trending to the upside. Okay, so all of these things, I think they are straightforward. Let me see. What are the attributes of the major zones to maximize profits? How do I identify a major zone? Now, it's easy. There are a number of ways, but let me just show you one or possibly two. Now, let's use this Euro JPY. So let me use your words again. So attributes of major zones to maximize profit. So the major zones, high probability areas where you expect price to reverse from or go a certain way. You don't find them on your lower time frame. Find them on your higher time frame. So say this is my daily. Once you go to your daily time frame. Okay. So what we do is we look out for break and retest. Now this is a resistance. The major resistance, the major high, price respected well. Now, what you do is you mark this high. You are not trying to sell from the high because you are in an uptrend. First thing is to identify your trend, right? Now, we identify that we are in an uptrend. So we are looking for possible buy opportunities. So how do I identify these zones I'd like trading at? Is I want to see price create a high, which is this. And I want to see price respecting that high. In fact, the lower price comes, the stronger this high will be in the future. Which means that when price comes to the high, I don't want to sell from the high because I'm in an uptrend. If price breaks it and it goes up, the probability that price will come back is very low. So if you don't have a stop loss, account can be wiped. It might not really come back for you to be in profit, okay? If it comes back a little, it might be a retracement to continue pulling to the upside. So price successfully took out the high. So what I need is price to come back to this level and not break it down again. Come back to this level and respect it and start going to the upside. Right. So that is what I want. This is one key level that you can identify. One key level. In fact, there's a mini one here. Now I created this little high. Not very strong, as strong as this previous one, but it still counts because it's on the daily time frame. You can see price respected it. So if I mark this high, now price respected this high. Oh, sorry, price came down, respected it for the first time. I'm not selling, finally taking it out. This is what I want. Then I need price to return to it. Now, when I say price has what it needs to do, is this. You can see when price came to this side, I started pulling to the upside. Note that price has not done what exactly it needs to do. It needs to come into this level, which means that sometime in future, it might come to this level, all right? So the best buy I can have is if price comes all the way here. Now, notice the second time it came all the way to this point here. This is where, when it started buying, it just kept buying and buying, right? So this is an example of what we are talking about. And you can do this on any time frame. Sorry, you can only do this on higher time frames. So fast forward to current market price now. You already have, let's say, on the daily, because that's why I mark these highs. You already have this level on the daily. Okay, this is the latest level here, this one. So I need a price to retrace into it. So let me go to my 4 hours. See? So sometimes you can still try and attempt it on lower time frames like 4 hours. Don't do this less than 4 hours. Okay, don't do this less than 4 hours. Now, look at this high. It's a mini one, not the strongest, but it's good. It counts. Price broke it. They tested the first time not perfectly, broke it now, came back into it, and we're about pushing up again. So that's what we're talking about. Okay, so if you can identify things like this on higher time frames like your daily, your 4 hours. So let's try to look at it on some other instruments. Let's see the euro dollar. The euro dollar. You always see things like this on my chart. This is what we call the top-down analysis. Okay. All right. So now, whenever you see all these lines on my chart, you understand what you're looking at, right? Good. So let's do this. You can see this high, respected. I marked that level. It broke, came back, respected, and went. Now, this is also a mini high. Broke it, came into these levels, respected, and up. Now, these highs broke, came into it, respected, went, came back into it. Now, you can see this mini one here. This mini high is a small one. You can see when it broke, respected it at least, but there's a major one down here, which it still came into. So we are trading in between this high, this low, and this high. So currently, price has come to the low. So what do you think you should be doing? You should be pushing back high, right? Good. So on 4 hours, this is how it looks like. And on 1 hour, this is how it looks like. So that's why price has been pushing up and up. Let me see. Let me bring this, extend this to the future. So that's why price has been pushing up and up from this levels, right? So we expect price to possibly keep pushing up. Alternatively, price can come into these levels first before pushing to the upside, okay? Or combo all the way down here and start that journey again. So that's for the euro dollar. So this is silver. Remember I said that, was it 2 weeks ago? But not on a Wednesday, on a Thursday. 2 weeks ago on a Thursday, I made mention that silver is most likely not going to take out this high here because this is a major high and it's going to do what we call a double top, possibly a triple top before price can even think of breaking this level. This is a major price might want to stay here, right? Might want to stay here for now, which is between these lows and this high, right? Between this low and this high. And this is how it looks like on the daily. This is how it looks like on the daily. So this is a major low and this is a major high. So price is trading in between these levels, and this is 8 on 4 hours. And finally, this is it on 1 hour. Because I like to come to 1 hour. 1 hour is like central to. Okay. What do you do when price comes to unexpected zone? All of a sudden, it starts going with a very big candlestick. Yeah, sometimes it does that. Sometimes it does, actually. But let's look at it again. Thank you, Mr. Peter. Thank you so much. Here's the schedule. Okay. So what do I do when price comes to unexpected? So okay, so there's something that you can do, but it's not difficult, but it takes discipline. Yes. It takes discipline, and I think that's a difficult aspect of it. So let's say, let me read this chart before we continue. How do you then apply fee? Okay, as I said, there's a lot of strategies that you can apply. Okay, so let me backtrack a bit. Let me backtrack. Let me backtrack. Let me pick any of these instruments. Okay, say the euro dollar. Now, let's say I'm expecting, or I was expecting price. This is a zone that I've marked. And I was expecting price to come into the zone, then reverse and start going back to the upside, right? Good. So price gets inside of that zone. It doesn't mean I should just take my buy. That's why I said there's something you need to do. It's not difficult, but it takes discipline, and which is the hardest part. For us to buy, we need price to be creating what we call higher highs and higher lows. Okay, but we want to buy when price is still creating lower lows, lower highs, lower lows, lower highs, lower lows, lower high. All right. Now it stopped creating a low. But what you need to understand is this fractal. Price need to take out the last high it created, the last major high it created, which is this one. Right? Now, price didn't take out this one. Until price takes out this high, then if you can retrace, that's when we can buy it up again. It shows that there's momentum for price to push to the upside. Hence, that's why these levels failed. Okay? That's one. Two, check out this level now. When price came into this level, although not 100% inside the level, but came very close to the level. So I need the market structure to shift. And what happened here was that price was creating lower highs, lower lows, lower highs, lower lows, right? So price didn't take out this one. This was the last major high first that I created. That's why I'm drawing it this way. So I needed price to take out this last high it created before it broke this low. Price didn't take it. It just wicked above it. Okay, there's a difference. It didn't take it. The candle went up but was rejected before it could close above it. So we are still low. And finally, after many attempts, price body closed candle outside of this level. So this is where price took this level out, which makes the lowest point before it took it our major zone that price shouldn't go below again. These are some of the things that you would learn actually from our session tomorrow. Very key things that you learn. You learn the surface and you learn the deeper things. All right. So the moment price does this, then I know that price then have that momentum to go up. It's just like say you want to attack a building and everywhere is locked. But once you get an opening, you finally were able to breach one window, breach this window. There's an opening now, all right? You can start preparing for your attack, all right? Except you're a terrorist, so please. Now, price finally breached this last high, but the close candle out of it. The difference between this and this was because this one, the candle didn't close, the body of the candle didn't close above this level. You can only see the rejection. You can see the rejection, right? But this one, the body closed outside. Hence, it can go, then come back, then go back. So when I say opposite attract, is that when price is retracing, I want to buy, well, I need a red candle, which is, you see this major red candle, either one or two of them. Let me see the two of them. If I mark from the top to bottom, then I extend to the future. I will need price to come into this zone. This is my other block. Before I start buying again. This is where we have that confidence. And this is exactly the same thing that I did right here, if you notice. So I want to buy, but I need price to come into this zone. So this is the red candle, if you notice, the top to the bottom. So the bottom here and the top. I need price to retrace inside, just like it did here before going up. All right, so these are some of the strategies that you really need to learn. So you notice that it's not that difficult, right? But there are certain things that you need to understand. If you don't, then trading will keep being frustrating, like very frustrating. I know your money is on the line. So instead of making money, you're always giving the market your money, giving the market your money, giving the market your money. I can imagine how frustrating that can be, right? So that's why I feel like price needs to come into this zone right here for us to then have that continuation buy. So this is a continuation pattern, which means price has done that upward push. I want to continue, but I need it to come to the opposite for us to push forward. Price has done reaching, it has gone. Come back, then we buy. It has gone. Come back, then we buy. All right. So we'll keep buying, we'll keep buying, we'll keep buying until we hit a major zone. So as simple as that, right? So let's see. What do you do when price comes to the Now, not all zones that price will actually respect, okay? But there's a high probability. Mobile phone. We are not using mobile phone to do the analysis, so it's difficult for you to get. Gold and USD JPY. Gold and USD JPY. Okay, so we have USD CHF, gold USD JPY. Okay, I found USD CHF. Now, there's one thing you need to understand about CHF. So if I go to my higher time frames, you will notice that we are on a downtrend. So if I zoom lower, you see that we are practically on a downtrend. On a downtrend. The retracement can be massive, but yes, it doesn't invalidate the downtrend. But let me use my weekly time frame. Okay, this is clearer now. On the weekly time frame, you can see we are massively on the downtrend on the daily close. So what we do is we look out for major highs. So on my 4-hour time frame, this. Okay, let me do it on the daily first. So the same thing we do when we're buying. We do it on the daily. So you notice this is a major low. Price retraced from it, then took out the low. So we need price, after taking out this low, we need price to retrace into this low for us to sell from. Remember, just flip the script when we are doing the buy. This is a major aspect of it. Flip the script when we're doing the buy. So exactly the same thing on my daily. So on my 4 hours, this is how it looks like. Right? The zone is wide. It's okay. So you notice that every time price gets here, so if we use, let's use 1 hour now to do this. Every time price gets into that particular zone, let me show you what price does. Okay. What are we? Where is price? Excuse me, I'm trying to. Oh, okay. These levels right here. And price took out these levels. Okay, good. So every time price retraces back into this level, for it to sell, there's something we need to see. Okay, for it to sell, there's something we need to see, which is this. Let me make it faster. Okay, good. Now, before now, we've been having buy patterns. Buy. Okay, buy. Notice this was like a last high, buy, retrace, opposite. See this red candle? It had to come into this red candle, then push up again. And see, it took this out, right? Good. So you look at this red candle now. Price need to come very close up into it. Kept buying, price kept buying. Notice that it's not breaking below lows, right? And it kept buying. Now, all of a sudden, we need price to reverse. It enters that zone. And you see this last low right here. It took it out. Okay, it didn't close below it. Okay, so it's not taken out. So this is it. It didn't close below it. You can see the massive rejection, right? Good. It didn't actually close below it. So, but here now, price closed below it. Below where exactly? This last low. Okay. Now convincingly closing below it, which means I need a retracement into I want to sell, so I need a buy candle. And this is the last buy candle we have here before the sell started. You can see price came into this level here and tumbled down again. And it kept selling, right? Went up again. Now, for the first time, it took out the last low right here with one move. We just need a retracement. Now, once price does this, it might be difficult for us to have that opposite candle because of the distance. But irrespective, if we have it something like this, the last two buy candles, you notice that price came and just tapped into it before we continue massively selling and selling and selling and selling and selling and selling. So now USDJPY price has been doing some massive retracement to the upside. Okay, so it has gotten into our zone. So we need price to take out the last high. The last loop. We want to sell now. So we need to take out the last loop. And this is the last loop. Okay, this was a low, created another high. This low, this is the last low, and it has been taken out already. So what do we need now? We need an opposite candle for us to sell, which is we have this buy candle here from top, bottom to top, extend this way, high. So this is exactly what we need right now. We need price to keep going up, enter this zone, and then let us start tumbling more to the downside. Okay, so this is what we are going to be having more. Anywhere the red candle is, sorry, the green candle is, taps into it and keeps selling again. So this is just things that you need to know, right? You really need to know. This is majorly market structure. We have what we call break of structure. We have what we call change of character. So you need to understand all of these minute things. It helps a lot, right? It helps a lot. Like I don't pay much attention to candle patterns. Yes, you're right. And not because they are not important, but this one is much more important than the candle. This is much more important than the candle pattern. This is much more weightier than the candle pattern, right? Much more weightier. Market structure will outweigh It's like market structure is like the constitution itself. The constitution. Meanwhile, candlesticks is just like the law you have in your house or a state. Whatever laws you have within the state is subject to the overall constitution of the nation, right? So whatever candlestick is doing it inside of market structure. So if I just follow the market structure, that's it. If you want to talk about candlesticks, they are fine. If you combine them, it becomes much more effective. Yes, much more effective. But we don't have that time for me to start mentioning everything. In fact, this one I'm doing is already taking our time. So what you would do for me is to go back to YouTube, watch this video again and again, understand the concept I've used, try using the same concept, and you find out that it becomes easier, right? Now, once USD JPY, then go to gold. Let me see where, okay, this is USD JPY. Good. Now, the same thing that we do, although sometimes market cycle might just change a bit, but it's still the same thing. It's still the same thing. We're just doing rinse and repeat, rinse and repeat, rinse and repeat. Okay, so this is a high, this major high. Price retrace, and we need it to be taken. It was taken. You can see price retrace back into it and pushed higher. Then we now have this as a major high. Retrace, taken, retrace, and we continue, right? So far, what now price is trying to retrace. Where do you think price should retrace to before we now actually have that buy? So what do you think? This is on daily. What do you think should be happening on your lower time? Should price be pulling up or should it keep coming down? For those who have been following from the beginning or from the middle, you understand? Look at it, look at it. I need your response. This is USD Okay. Come in. Let's see. Perhaps you want to make contribution. All right. You can unmute and you can make a contribution.
Okay, sir. Hello, sir. Good morning, sir.
Good morning, sir. Good morning.
Yes, sir. I think you should retrace a bit to that high above that where you put that blue. Let it come to around that level.
Sorry, I didn't get you. Your voice was.
I think we should wait for it to retrace to that level. The above where you put that blue.
This level, right?
Yes, that's too low, or a bit higher, or the other resistance. There's another resistance. Yeah, that side, yes. That side. Is that okay, sir?
Yes. Okay. All right. So that's good. Okay. That's good. So anyone else? Let me see what people are saying. Yeah. Okay. Someone said coming down. The last high created. Okay. First come down with Bogbino. Okay, good. Excellent. So you are getting the gist. Good. So irrespective, so when you go to your lower time frame, you will come to your 1 hour now. So don't be shocked to see that irrespective of the fact that USD JPY has a natural uptrend, if you look at it from our daily, it has an uptrend. So irrespective of that fact, you know that, okay, it has broken above the high and currently is doing retracement, and we have these two key levels for price to retrace into. So until price does that, we are not going back. We are looking out for sell opportunities, right? That's if you want to sell. Me, I like going with the trend. I like going with the trend,
Yes.
not against it. Right? So except you want to trade both sides. Okay, so this is what will possibly keep happening, right? This will possibly keep happening. So we want to sell, we need price to get to the opposite of the trade, opposite candle. So we have this last buy candle here. And you notice that price just tapped into it. Let me see. Okay, the bottom. Price, okay, really never, okay, tapped into it here, sold, Now, this one, then 2 is we have this 2 right here to sell, irrespective. Now, this is a high that price created. We don't expect it to take out this high. So anywhere from here, we expect price to start tumbling down again. To tumble down again. So let's say here, something like this, tumble down more, possibly even take us to this area. Then we need price to start creating higher highs for us to start buying it up again. Okay, so as simple as that. So once you just execute this, now if you execute this, I'm not saying you're going to write the percent all the time. Now, if you do this 10 times, you should be right more than 5, 6, 7. So you should be right 6, 7 times, 8 times, maybe wrong twice or 3 times. You'll be right more often than not. And cases where you'll be wrong, you just simply you are selling, just simply have your stop loss somewhere. As simple as that. Or consider this high, then have your stop loss maybe somewhere above this other high. Perhaps you might respect this high. So once you do, whatever happens, you know, okay, price is still tumbling down. Then you wait for it to get to this zone, change, then you start buying it up again. It has to respect one. All right. So these are the things you need to do. Okay, GPCHF. Then let's see if we have. Okay, Euro CHF, I'm still expecting this guy to really sell. Still expecting it to really sell. So this is it right here. Okay, this is it right here. On the daily, you'll notice that this is a massive downtrend. Massive downtrend. Now on 4 hours, looking out for the patterns now. I was expecting to sell from here. It started, but went above that level again. So there's still a high here, and there's still a high here. So it has to respect one of these highs. Okay, it has to respect one of these highs for that downtrend. Now that means it has taken us to this high here, and we should start seeing price tumble to the downside for Euro CHF. And lastly, I see gold too. This is not the one I would like to use, but let's see, irrespective. So gold has not given us that double top. I'm expecting a double top, means something like this. I'm expecting gold to work his way all the way up here to give double top. Okay, but it's very slow in doing that. Very slow in doing that. So let's follow what we see on 4-hour time frame. It makes some micro movement. There's a high that price finally broke here. You can see price retraced into that level again. And this is where we are trading our buy from. Okay, so whatever happens, I would want price to retrace to the opposite candle for me to buy. And the opposite candle is all the way down. So you can see that is a long shot. Except I'm doing it on a 1-hour time frame. Now, this on a 1-hour time frame is good, but it's not as strong as your daily or your 4 hours. All right. So price can retrace into here. It hasn't really touched that zone. So either here or here for us to execute buy. If you ask me to sell, not really, because I'm still expecting gold to pull up. Meanwhile, the pattern is creating is higher highs and higher lows right now. So I'm not selling when price is actively giving me that structure in the market. Okay, so Euro CHF, we're looking out for sell. Looking out for sell, Euro CHF. But from this level, well, price was stubbornly pushed above, but still expecting that sell. Yeah, now it hasn't changed pattern yet. It hasn't changed pattern yet. It hasn't, right? Now, what's the pattern that we are looking out for? Price needs to take out the last low. Now, from here, this is the last low here, right? Before price went up again. So I need price to come, take out this last low, retrace into any buy candle that started the move and continue to the downside. And it's going to be selling for days. Like it's going to be selling for days, coming back into this level. So that's for Euro CHF. That's for Euro CHF. What other instruments? We've not looked at coffee. So if you missed anything, please head over to YouTube and watch the video again so you can understand the concepts that we used for today's analysis. Okay, so this is coffee. I will still do the same thing. We'll still do the same thing. So where is this coming from? Not a strong one, but it's a good one also. You can see this level. So hence the current rejection, the rejection we had here. Let's look at it on 4 hours. Okay. So we are trading between this low and this high. So price is trying to push to the upside. Okay, trying to push to the upside because it took out this one. Okay, no, this is not it. This is still a high. So the continuation took out this one, retraced and continued. But you can see there was a massive gap down. So price is trying to push back up again. So I expect something like this into any of the sell candle, then continue back into any of the sell candle. Remember, I want to buy, so we need it to sell first.
154.
Final. Okay, so I expect coffee from. Please, I like it to news. Let's see. Okay, so this is the pattern I'm expecting. Why? Because we are looking currently, it's giving me bullish pattern. So if we are to continue that bullish pattern, this is what I expect us to be seeing on coffee for the next few days, right? Next few days. So any other thing you'd AUD JPY. AUD JPY. Do I have that? Let's see. So AUD JPY. What's with AUD JPY? Okay. Now this is AUD JPY. As usual, I like to start from my higher time frame. Oh, I've not opened this guy before, so it's taking time to load. It takes its time to load. This is MT5. MT5 loads. Oops. I want to find out if we have an uptrend or a downtrend in our hands. We want to know the overall trend first before we know which one to follow. Oops. This is going to take our time. Let me check what that question was still loading. Okay. In the event of a sudden gap, while a place trade is ongoing, what happens then? So if you place a buy and it gaps up, you make profits. If you place a sell, it gaps down, you make profit. But if you place a buy and it gaps down, you obviously make a loss. And if you place a sell and it gaps up, you obviously make a loss. So the gap should be in the direction of your trade. If not, you make the loss. There are gaps. Gaps can happen on your trade. Why did the spread get widened at night? Well, it happens a lot. The market is about to be reset. It happens. The spread just widen, you know. So 3 pips, 4 pips, it can widen to 15 pips, even 20 pips. But it always comes back, right? It always comes back. Yes, it will come back. Give it like so the widening of the spread start happening around anything 10 past 10, then anything from 11. It takes like an hour. Then the spread starts to correct. So before we enter the next day, the spread is already corrected. Yes. Okay. This guy will take our time. We are waiting for it to load. I'm seeing up. I'm seeing what is loading is looking like up. Okay. For what I can see thus far, AUDJPY is giving me this uptrend. Okay. So let's come to the lower time frame to see what patterns that we are having. Oh, sorry. I need a break and retest, right? Just like we have here, break retests, not a perfect one. We have here, good, and something we have here. And we should be having around here. Okay, so on 4 hours, this is how it looks like. On 4 hours. So we are currently buying off from this place and we are trying to push it to the high again. And on 1 hour. So we're just taking out this mini level here. So for us to have a continuation, we look out for these cells. So for those who understand fair value gap, you can also use fair value gap to do it. I'm using supply and demand to do it, not fair value gap. So this is what we can do to keep pushing price to this level. So in the long run, I still expect price to get as high as it's. Given that we're in an uptrend, there's much more momentum to push price higher than lower. Okay, the price is pushing lower to push higher in the future. All right, so I think this is as much as we can take for today. Yes, so this is what I'm going to do. I'm sorry I'm not sent for those I promised that MT5 indicator. I honestly couldn't have sent it because of so this is what I'm going to do. It's going to be on Friday. Please bear with me. Once I'm done here now, I have other things to do that have been pending. So and I have session tomorrow, which will also take my time. Maybe tomorrow afternoon, but I don't want to promise. But this is what I'm going to be promising. On Friday, I'm going to send the indicators for MT5. So if you are still interested, please just let me know, put in your mail. I'm going to send it to your mail, the files to your mail, walk you through downloading it, okay? So, and installing it. Please bear with me till Friday. So for those who are interested in that, the indicator for MT5, still reach out to me with your, let me see. This is, okay, you can reach out to me on 08026582493. 00265829493. I'm Victor, and they call me Bishop. So, looking forward to hearing from you and have a very, very, very profitable day. Thank you very much.